Thank you so much, Anushi, for that. Let's quickly take a look at what's happening because your broader markets are mirroring what's happening in terms of benchmarks as well. If you pull up the small cap index in terms of BSE small cap, and if you look at the Nifty small cap 250 as well, you see the kind of mild recovery that happened from the day's lowest levels, but the pressure has continued. There you go. 0.3% lower in terms of the small cap index. And if you talk about the Nifty small cap 250 as well, similar kind of trends where you're nearly at the day's lows. But let's quickly look at individual company impact as well. On the back of earnings, broader market stocks which are reacting in trade, you have the likes of a Godfrey Philip, 9% up move, strong set of numbers. Savda's second consecutive session of gains on the back of a strong set of numbers, and a Triveni Turbine on the weakness is trading under pressure. Apart from that, you have a TBO Tech that has cooled off slightly, but the expectation is that going ahead, the quarter, the coming quarters will be better, so there could be buying interest that could be emerging on this one. Butterfly Gandhimati, strong set of numbers, and a Sanofi Consumer, strong set of numbers, 7 to 12% is the kind of up move that you are seeing. Another pack that is buzzing in trade is the fertilizer pack. No major news coming in there, but gains in the range of almost 2 to 6% on the jumble put pack as well as the RCF. Whereas the textile companies that have been trading under pressure, and probably this is taking concerns from the tariff war, they are seeing cuts to the range of almost around 4 to 8% in terms of where textile companies are concerned. PSP Projects is another one. You have Adani Group, which has gone ahead and increased stake in one of the small cap, 2.5% up move on this one, though the gains have been cooling off. Other stocks that are buzzing in trade, Prakash Industries, strong moves there. Newgen Software, Radico Khaitan, also some bit of cooling off there, but good move seen on this one. And Tanla and Sangam India, a few of the other names from the broader markets which are buzzing in trade. So that's the overall picture that you're looking at in terms of individual stocks in terms of the broader markets. But I think one company that you guys are focusing on is Aether. Puneet, I think that's going to be an interesting conversation.
Well, definitely. Thanks so much for that, Hiral. And we've seen a stellar performance for the company compared on a year-on-year basis. Costs have gone down. The gross margins have also increased for the company. Let's also pull up, from the day's highs, we have seen some selling on Aether Energy in this particular quarter. But let's also get in Tarun Mehta, who's the executive director at the company and co-founder, of course, of Aether Energy. Tarun, a very good afternoon to you. Thanks so much for joining in and welcome to NET Profit. Largely, let me start off first with the key question. You have reduced costs in this particular quarter. EBITDA also, the losses have reduced. Do you expect that by this time next year, Q1 FY27, you will be able to be at EBITDA break-even levels at Aether Energy?
Right. So last quarter was a great quarter for us. Our new product is the family scooter. Sorry. Yeah, new product, the family scooter, landed really well, and I think that's the primary reason why revenue was up almost 80-90% over last year, and sales. At one of the smaller distributions, and with that alone, we were doing 15% market share. We can catch up a lot on distribution over the next few quarters. So we are forecasting a fair bit of growth potential on our distribution footprint, powered by this new scooter. So our unit economics is already in a good place, and expanding distribution should give us a fair bit of operating leverage, and that's what we expect will drive reducing losses over the coming quarters.
So Soumit Sarkar also joining into the conversation. So on a sequential basis, if you look at your gross margins, they have expanded by nearly 300 basis points. Is there more room for expansion going forward, or gross margins stabilize around the current levels?
I think the entire industry is at a fairly early stage, and there's a lot of cost reduction that continues to happen every quarter as we speak. For us, three strong factors in the recent quarters have been first, favorable commodities, particularly with lithium-ion cells. Second, strong results from value engineering. Our engineering teams have had a stellar record over the last few years in cost reduction, and that's continued in recent months also. And third is very strong sales of our software accessories. So that continues to trend very favorably. We're very close to the vast majority of our customers, almost 80-90% of our customers continue to buy software, which is a very high gross margin product for us. And despite the launch of a more mass market product, that trend hasn't really flagged off at all. So these three factors have contributed to strong trends. In the coming quarters, for us, we expect material margins could get better because we are moving to cheaper chemistry cells, LFP versus NMC in lithium ion. So those we expect will help with margins. Value engineering will continue, and by next year we'll have a new platform, the EL scooter platform, which is a cost effect, which is lower cost platform. So we expect that will also help with margins.
Joining in as well. You just spoke about the EL platform that is coming. In fact, August is the date that we should be watching out for. Just want to get your sense in terms of further market share gains, particularly to the new launches also, which are anticipated. If you can talk about that.
So if you see our market share performance in markets where we have had strong distribution and strong product fit, for example, in South India, it has been around the 20-22% market share mark for a while now. In places like Gujarat, in recent quarters, we've seen a phenomenal result. In fact, last month, if I'm not wrong, I think we were number one in the state of Gujarat. We believe there is an opportunity for us to recreate a performance very similar to what we have achieved in South India and Gujarat in many other parts of the country. And distribution would be the key enabling factor to do that this year. And the lower cost platform would be the big factor next year. I think we closed July with just under 16% market share, which seems to be a defensible position. And given the expanding distribution, we believe there is a few more points of gain that could be within sight in the coming quarters.
Tarun, just one question in terms of South India, because you have been number one in that market for a very long time, and you mentioned about store expansions in Middle India, as you call it. Specifically, those stores in South India, is it that the sales coming from there will be, give you higher gross margin because of lower discounts in those areas, or is it that the actual sale number is something that we should watch out for going forward for you?
Ather has never been, we've been never big fans of discounts. Right from day one, even in the peak of discounting in our industry about 4-5 quarters ago, Ather stayed away from any real discount outside of 1-2% discount typically during festive. And that's going to be the strategy going ahead also. Obviously, newer markets will buy more lower end variants in the early years, but we have seen a very healthy. I think the number one direction for me here, from which I'm taking direction, is the sale of software. Our software sales across all geographies, across states, have been very, very strong, which I think is symbolic of the fact that Ather can sustain strong ASPs irrespective of the market. South, given that it's a large market, so old market is obviously one of the more profitable markets for us. But I think every market for us is quite lucrative and is becoming quite lucrative with every passing quarter.
Well, just one final question from my side. You have raised money in this IPO for some capex on R&D, but also putting up a new factory which will likely come in Maharashtra. So your capacity utilization has been hovering somewhere around 40% before the IPO. Just want to understand, will you still keep the factory that you had in Hosur, because that was of course on lease? So will that all the production eventually in the medium term move to the new factory that you're setting up?
We've already acquired roughly under 100 acres in Chhatrapati Sambhajinagar in Maharashtra, which is where installation of a new factory will commence very shortly with the IPO proceeds. Currently, we intend to continue our production out of the Hosur facility in Tamil Nadu and also the new facility in Aurangabad. Utilization of a current factory is rising up really fast. As you saw in last quarter's performance, sales grew almost 100% over previous quarter. And at that time, we were at about 30-35% utilization. So you can see the trajectory. In fact, my number one worry right now is that would we hit peak capacity even before Aurangabad goes live? So team is running full steam ahead to make sure Aurangabad, Chhatrapati Sambhajinagar comes live by next year, so that we manage the demand really.
All right. Lastly, Tarun, I know that this situation is evolving and it would be difficult for you to comment, but on rare earth magnet, I believe that Ather has actually done a very good job, and you have looked at alternative supplies and alternative materials, in fact, also, and you're not expecting an impact of more than a 1 week production, right? So we're quite positive that has come actually, the statement, right?
I would read this as positive in the current climate. Engineering and supply chain teams have spent an enormous amount of time over the last few months to find alternates. And I've been publicly saying in the recent comments that I do believe the near-term solution for our industry would be to move away from heavy rare earths into light rare earths, while continuing to look at non-magnet-free motors in the long term. So our teams are working furiously in that direction, and I remain optimistic that the impact of the crisis should be limited to this quarter.
Well, thank you, Tarun. Thank you for joining us and explaining everything very rightly about Aether Energy. With that, let's go across to our next guest for the show, Prashant Tapse, Senior Vice President, Research Analyst with Mehta Equities. Prashant, any views on Aether Energy? The quarter looked quite strong here.
Yes, when we compare two companies in the EV market, is Ola and Ather. So Ather numbers were far better than what Ola has presented a few months back. So the market is allowing to see which stock can do better. So in terms of managing their cost, managing their losses, I think Ather has done really well. And the new product of Krista, I think that has really done very well in this a lot of South Indian market as well as the entry into the middle market of India. So I think with respect to their margin management, with respect to their expansion and the product quality. So again, not giving any discount. These are the strategies why I think the numbers were really good, and I think the valuations are again going premium to what Ola is. So overall, very positive on this stock with a target of at least 440 to 500 for next 12 months on the current levels.
Okay, so that's the view that we are having for Aether Energy. But before we go to our next small cap and stock in focus, let me talk about Adani Ports, which is flashing on the screen below. Now, if you look at the numbers, now they did beat estimates. In fact, revenue is up over 31%. In fact, margins also are at around 60.2% as compared to an estimate of 59.3%, and net profits are about a 6.5% of a growth. If you look at the FY26 guidance given, the company expects about 16 to 22% of an increase in revenues to 36,000 to 38,000 crore. EBITDA is expected to see about 10 to 16% of a growth to 21 to 22,000 crore. And net debt to EBITDA levels, they have maintained up to the levels of 2.5 times if we are seeing. In other key operational metrics also, if you look at the FY26 scenario, port cargo volume is expected to see about a 12 to 14% of an increase, while trucking revenue is expected to see about 3 to 4 times of a rise, and marine revenue is expected to see about a 2 times of a rise. So Adani Ports flashing on the screen below, but with that, let's go to our next stock in focus, which is Butterfly Gandhimathi. Now the stock is passing in trade today, and this is on the back of its first quarter results that we are looking at. Mahima joins in with more details.
Right, so overall it's been a good quarter for Butterfly Gandhimathi in terms of Q and key highlights. There's been a steady quarter, and this is amidst weak industry growth trends that we're seeing. Earnings were lower than what the street was expecting. However, slower than expected revenue and margin growth is on account of the overall demand trends. While industry demand trends remain subdued, its focus is on margin turnaround, and that remains intact even in the commentary given by the management. In terms of the overall numbers, revenues up 3%, EBITDA up around 50%, margins came in at 7% versus 4.8%. Net profit has seen a good growth of around 50%. In terms of other highlights, the focus on premiumization of portfolio, pricing and cost optimization will lead to margin expansion is what the company believes, plus growth for mixers, grinders, pressure cookers with improved market share and traction across channels is being seen. And lastly, in terms of gross margins, they're healthy at 41% on pricing action and product mix. Lastly, in terms of the valuations, Crompton, which holds 75% in Butterfly Gandhimathi, is trading at a valuation of 28 times forward 27 estimates.
Right, Prashant, any views on Butterfly Gandhimathi? The number looked quite strong in this subdued environment.
Yes, despite having so high competitive industry, I think the numbers are really good. That is why the stock is rewarding to the price action at 7% upgrade. Again, margin improvement of almost like 100 to 150 basis points on wire, which is really appreciable. That is a surprise for the stock today. But again, valuation I think still little bit of expensive when we compare with the Compton, which is holding the stock. Despite having a expensive valuation, I think one should have a very positive outlook on a long-term basis, at least for 10 to 50% growth in the current year.
Okay, so that's the view that we are seeing for this counter. But also let's address AGI Infra now. This is another counter which is passing in trade today, and this is on the back of a recent couple of updates that we are looking at. The latest one being that the board has approved a 1:5 of a stock split, and the record date will be decided after a note of the shareholders' approval on the same. But this is not the first time that the board has declared a stock split. In fact, if you look at December 24, also they had announced a 1:2 of a stock split earlier as well. Nuvama also has a bullish note on this counter, wherein they initiated a buy call in the month of July, and this is the target price of 1,448 that we're looking at. It believes that it is one of the organized real estate players having an edge in Punjab's micro markets over there, which is currently underserved. Other than that, they're seeing about a pre-sales CAGR growth of 13% in the years between FY26 to 30, and they have a strong launch pipeline which adds up to about 5,120 crore, considering it has a land bank of 9.8 million square feet. Along with that, even if you look at the cash flow positioning, we expect the surplus to continue at around 1,506 crore. This would be aided by strong collection growth going forward. Just a little bit about the company. It is a real estate developer in Punjab, is what we are seeing. It has delivered over 10 projects and has covered total saleable area of so far of 8.9 million square. So far, if you look at the stock's performance, it has seen about a 9% of an uptick in terms of this last one or odd month. So, and if you look at the last 6 months, it has seen about a 22% of an uptick. In terms of the pre-sales also, while FY23 and FY24, we have seen this number going down from 667 to 500 crore of pre-sales to 366 crore at the end of FY25. But as stated by the Novama note, they're bullish in terms of how the FY26 is going to shape up for the business. Net debt to equity also remains on the healthier side. From FY23, there were almost zero net debt to equity is what we are seeing, which is now moved upwards to the 0.4 times of level is what we are seeing. So this is the overall picture that we are building for this stock. But Prashant, let me come to you on AGI Infra. What's your view on this counter?
Despite being a small cap company with a market cap of almost 2,600, but valuations are still very expensive, which is trading almost 40 times the PE and even price to book valuations of almost 9 times. So this says because of its unique business model, which is spread in Punjab, and there are no other branded players present in the location, so it is giving this kind of company a premium valuations. But again, for a fresh new entry in the stock, there should be a wait and watch approach going forward. But again, the center looks really good, and if there are no branded players in the same location, this company will really have a very premium valuation going forward. So what are the target would be around 250 for next 6 months?
Okay, so that's the target that we are seeing for Asia Infra. Do keep that one on your radar. The next stock in focus is GPT Infra projects. Now, what we are seeing over here is the first quarter numbers being in focus. Now, they've seen about a 29% of as well as lower finance costs, but higher construction costs in the quarter impacted the margins that we are looking at for GPT infra projects. The stocks is buzzing in trade today. In fact, let's also see the order book positioning in the last 3 years or also they have maintained their order book at the likes of 3,000 to 3,400 crore of a positioning. So that is what we are seeing. In terms of revenue mix also, it has about 97% of its revenue come from the infrastructure segment, while 3% of the revenue comes from concrete sleepers. So this is the overall picture that we are seeing for this counter. Prashant, your view on this?
Very positive. A small cap company which has almost 2.8x visibility in terms of order book when compared with the last year's sales. Even valuations are very much decent, which is trading almost like 15 times the forward earnings and even price to book value of almost 2.5 times. So infrastructure projects, we are very much bullish, and I think a lot of growth can come into small cap and mid cap infrastructure projects, and CPD is doing really great in terms of, despite having a margin pressure, I think that can be cyclical, but overall, future for next 1 year, I think CPD can deliver you at least 15-20% return on equity on the current levels.
Another stock that remains in focus is Deep Industry. The stock is up 20% in the last 5 trading sessions. Yesterday, the company reported its numbers. What are the key takeaways coming in? Let's get in Vansh with more details.
The stock is up on the back of the Q1 earnings that the stock has reported. Now the earnings have been strong. The EBITDA growth has been driven by the revenue, and the company has reported the highest ever revenue growth of 62%. Now the margins have remained flat for the company, and the net profit is up by 75%. If we talk about the numbers, the revenue is up 62% at 200 odd crores versus 123 odd crores. EBITDA is up 61% at 82 odd crores versus 51 odd crores, and the margins are flat at 41%. and the net profit is up 59% at 59 odd crores versus 37 crores. If we talk about some of the recent order wins for the company received orders worth rupees 97 odd crores from Oil India on 2nd of August and orders worth rupees 45 crores from Oil India on 26th of June. If we talk about the total order book, the total order book for the company stands at 3,000 odd crores as of August 2025. And also, if we talk about some operational details, company received a 15-year contract worth rupees 1,400 odd crores from ONGC back in September 2024, and the ground level operations for the same has been started in April 2025. The company expects substantial EBITDA margins from this contract. So clearly, the strong numbers with robust order book is what the market is penciling in for this counter.
Well, that was the view coming in on deep industries. Well, thank you, Prashant, for joining us and giving us your perspective on the stocks that we discussed. With that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, मैंने कहा ड्रीम में तो यही कभी आती। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं, तब लगा कि लाइफ में ग्रो किया। कशी भाई, ऐसा कोई मिलता मुंबई में? चांस ही नहीं।
ऐसा भी करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The world has changed since the RBI governor delivered a massive 50 basis points rate cut on June 6th. Should Sanjay Malhotra cut rates further before the festival season, or should he hold rates? The most comprehensive, insightful 360-degree coverage of the monetary policy with the best experts from 8 a.m. on August 6th, only on NDTV Profit.
हेलो बोलिए मैडम, डेपुटेटिंग कैसे करने पड़ेगा आपको? हम और आप तो जन्म पे नहीं होता हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उतना हल्का सा भी खौफ नहीं है।
मैंने भी कहा खौफ किसी रखना चाहिए तो मैं कौन सा दिवस काम कर रहा हूँ मैं।
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire double trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy, hold and hold?
I say BSE for the long term.
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company. powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम नेगोशिएटिंग कैसे चल रहा है कैसे मालूम आपको हम और आप तो जन्म भी नहीं हो रहा हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है
मैंने एक बार वो खौफ किसी को रखना कि ये तो कौन सा बिजनेस काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire double trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock.
Thanks for tuning in to India Market Close right here on NDTV Profit. And it's a day which is, you could argue, quiet and low. There's no other way to describe this. So it's been about 0.4% lower. Nifty Bank about 0.6, Nifty IT about 0.7. So there are those pockets which are correcting in trade. But if you look at the larger picture, and if you look at the heat map, you will see that there are some which are trying to counter this as well. So in some sense, consumption has come back today, and let's pull up individual stocks. So between Titan, Trent, Mahindra and Mahindra, Hero MotoCorp and Maruti, you have some of the auto and consumption names. Let's pull up the names individually, and all of these seem to be doing well for themselves in the session today. Now, can we just have the individual names? So let's get Titan up about 2.5%. Let's get Trent. Let's get Maruti. Let's get Mahindra and Mahindra. Those are the names that are doing really well in trade on the upside. On the downside, like I said, IT and banking are correcting, and Bank Nifty is down despite IndusInd Bank, which is a low weight, of course, being up about 1.8% or thereabouts. So Nifty Bank down about 0.65%. IndusInd doing okay, but off the highs of the day for sure. The broader end of the spectrum, a degree of losers really. So results impact being felt on Triveni Turbine, so that is down about 7% in trade. There is weakness in Bombay Stock Exchange or the BSE stock, and that's stemming from the fact that there is talk of how the weekly options expiry might change. There is one of the media outlets which has posted that story, as a result of which BSE is corrected quite strongly in the session today. Some weakness in stocks like Piramal Enterprises as well, which is down about 3.5%, as well as Swiggy, which is down about 3.5% in trade. On the gaining side, again, not too many gainers, and this is despite the fact that the Nifty 100 is down just about 0.45%. So it's not that there are sharp losses at the broader end of the spectrum, but there are individual pockets of strength. Really, Azad Engineering on the results has done reasonably okay. The new kid on the block, which is Aditya Infotech, has actually done very well. Nugent Software is up about 11%. Godfrey Phillips is up 10 whole percent. And fertilizers as a bucket is having a really good day in trade. Starting with Chambal, but not restricted to that because fertilizers and chemicals, Travancore or FACT has done very well. Coromandel is up about 3%, so that bucket is doing rather well for itself. So that's the long and short of what's happening in the markets in the session today. What we'll do is we'll try and get in the management of Escorts going in just moments from now. But before we get in the company, let's get in my colleague Puneet to talk about the numbers of Escorts and in the trends thereof. Because Puneet, I think there is lots to be taken home from the results that Escorts has given versus what the industry-wide picture has been like, right?
Well, definitely. And with Mahindra on one side steadily growing from last year, we've seen that expectations and build-up of Escorts to have some kind of growth in this year. While quarter one might not show that, it's visible in sales, but not visible in the financials yet. So I think that's one of the couple of points. Management is expecting that for the industry, they are anticipating high single-digit growth. will they be able to actually grow higher than the industry or maintain their share? I think that would be one of the first things that we'll be, putting the management on. Apart from that, we'll also see that the margin guidance, management has said that 12 to 12.5% is something that they are banking on to maintain this year. That will be the other aspect apart from the larger industry as well. So we've seen, the share price largely flat. Also look at the 1 year chart of Escorts and you will know the story because for Mahindra, of course, the comparison is that the passenger vehicle space has been doing well, but for Escorts, the tractor segment has been weakening over the last year and there's been some market share loss there. That's going to be one of the key aspects needed at least from this results as well. But let's also welcome in Mr. Bharat Madan, who's the whole-time director and chief financial officer at Escorts Kubota. Mr. Madan, a very good afternoon to you and thanks so much for joining in. In terms of the market and the industry, I just wanted to first start off with that. Are you anticipating to see that it will be a year where we'll have some high single-digit growth because the base year was largely soft last year for the industry as a whole? What is your expectations for the industry for FY26 as well as for Escorts?
Yeah, so I think if you look at our guidance for this year, we have given the guidance for the industry to grow from mid single digits. We are between 5 to 7%. And the reason we said is that because if you look at the last few months, I think 8 to 10 months, the growth started coming in the rural side from September last year. So the second half of last year, obviously the base has already grown, so they have grew 15% last year too. So obviously if you come to this, the second half of this year, the base will already be high. So first half we've seen the growth now, the first 4 months we've seen 8-9% growth happening in the industry. But for the second half to sustain the similar growth will be a bit difficult. Now, that's also one of the reasons if you look at the growth, units has been more growth to southern investment market, which has grown almost 19% year on year. Compared to that, the market in North and Central India, where Escorts has a stronger brand and market share, have grown only 0.5%. So given that geographical mixed issue, so we obviously had some problem in the past few months. But now going forward, I think as we enter the second half, with the growth momentum in the south investment market will slightly slow down. We felt we get balanced out. So overall, the industry may still show a growth of 5-7%, but we expect it will be that skewed to the south and west as it was in the last 8 to 10 months.
Mr. Madan, when I think of what people are talking about when it comes to the positives for the quarter, this is Neeraj here, of course. Good afternoon. The third consecutive quarter of sustained margin improvement in the agri segment, and that is being looked up as well. I believe some parts of your commentary for the quarters there is looked up as well. To your mind, what was the one key positive that came out of this quarter? It could be something that has happened for 2-3 quarters and has continued this quarter. And what was that one thing that you felt was the sore spot for your company in the quarter one?
If you look at the margin for the last quarter, the reasons for improvement are two. One, obviously, the price increase what we have taken in the first quarter from 1st of May, and the tractor space especially. And second one is softness, which has been continuing in the commodity prices for the last few quarters. So we have seen the aggression. I think it's only in one of the 4 quarters last year we saw some hardening that happened. Otherwise, 3 quarters last year, we actually see the commodity prices continue to soften. Same thing we saw in the first quarter also, we got a benefit of the soft commodity prices, which leads to some improvement in the reducing the material cost. Obviously, going forward, as we mentioned in our commentary also, there's been some pressure now we're saying, but now we pass on the material cost increases will lag up a quarter. The last quarter, we've seen some metal prices have hardened up, which will have some minor effect on the second quarter margin, which also we try to offset with the other cost reduction initiative. But that can have some temporary impact. The pricing benefits will also sustain on the balance of the year also. I think the margin front, we give our guidance release between 12 to 12.5%, and last quarter was 13.1%. So if starting the numbers continue to be the way they are, so the way we expecting the industry to perform, we think we should be able to hold on to the margin level, and 12.5% will be improvement over last year's stage.
Okay, so you're saying that you could well nudge the all-time annual number of 13% as well if things hold up well. I mean, our 12.5 seems to be a decent fighting chance.
It will depend on the commodity prices on the balance 2 quarters. So if they remain soft, then it's possible you can also hit 13%. On the supply.
Just one other question is, and that is when it comes to revenues and whether pricing in exports is better, because I think you reaffirmed on the con call that you would do what 25% export growth in line with the industry standards. Would that be a fair assessment?
Industry will not grow 25% on exports. Our exports have been higher because our base is very low. If you look at last quarter, we grew 80% on exports. There was a very low base to the last year. But now we come to a situation where our average export every month is happening in the range of 500 to 600 tractors a month. And that number will continue. So that will virtually translate into 30%, 25% growth over last year export numbers. On the margin front, export obviously is better because the rupee has depreciated, so that's a benefit which is obviously in equity. So as we today, the export margins are even better than domestic margins.
Mr. Madan, you mentioned, at the start of this conversation that West as well as South markets have done well last year. And is that larger reason that the base is now, or the base effect would play in for this year that we could see, low to mid single digit growth in those markets? And is that the subsequent reason that you're seeing growth in northern markets where you are, of course, one of the major players? Is that one of the key reasons that you're looking at?
So there are two, three reasons. One, obviously, the reason what you mentioned is the base of the last year is already high in those markets. So we don't expect the similar double-digit growth will happen in those markets going forward, especially in the second half. Second is the gaps which we have in our product portfolio, which are not really catering to the paddy market. So we are going to introduce new product portfolio now in September, October, which we essentially went for the paddy market. The entire wetland series which is getting launched. So if you look at the portfolio of products in the last few months, so in all the brands we introduced a new product now, which are actually filling the gap. So with this introduction of this wetland series, we'll have almost 85% to 90% product application coverage on a pan-India basis across both powertrain as well as farmtrade brands. In Kubota brand, we're still some bit short. We're present in a very limited segment right now, but there the launches will happen maybe in the years coming forward. In the next 2 years, we'll see more launches coming in that brand.
And just one question from my side, Mr. Madan, you mentioned about launches. So the Promax is something you mentioned Kubota, you are looking to fill some gaps. You launched one of the key products there in the 41 to 50 horsepower category. So that point is also well taken. Your point on South as well as West is also taken. But apart from that, what is leading and giving you confidence of growth in the northern markets? Because in terms of the environment, nothing materially has changed. What are you currently seeing in the ground? And please correct me if I'm wrong on that aspect.
No, obviously the monsoon has been above average, so we've seen a very good distribution in the northern central market. So that's what I think one trigger which will happen. So we'll have a very good free fastest this year. And all the, I think the variables on the rural side are positive as of now. So including the higher MSP and the good purchasing power in the hands of the farmer. So that we feel should actually drive the demand going forward. So the only, I think, the headwind which we see and which is still not really clear is the emission norm changes, which was supposed to happen from 1st April 2026. Like that really gets implemented, then you can also see a lot of pre-buying demand coming up in the last quarter. And the industry has represented to the government and to the ministry to defer those norms. So let's see, I'm expecting more clarity on this to emerge in this month and August. That's what the ministry has promised.
And Madan, you've spoken that, about the demand and the industry. I think from a growth standpoint, what is the current capacity utilization you are at? Because you're also looking to put up a new plant. I think it's coming in Uttar Pradesh. What is the current capacity utilization and what is the timeline? Would it be that by somewhere around the next 2 to 3 years, we'll see the new plant come and be ready as well?
So our current capacity is about 170,000 tractors, and we are doing about 120 to 125,000 tractors a year. So it's still about 70% utilization levels are there. And there's also a scope to further increase the existing capacity to take it to level of 200,000 AV with some balancing, which we intend to do. So from demand perspective, for capacity perspective, we don't see there'll be any issue in terms of meeting demand in the next 2, 3 or 4 years. Obviously, as the demand really goes very, very high, then we can obviously look at expediting the whole setting of the greenfield facility. Otherwise, we think the existing facility can very well address the requirement for next 2, 3 years easily, and by the time we expect the greenfield facility should come up in the first phase.
And Mr. Madan, what's giving you confidence in terms of the export market? While the base effect is also very favorable for you, and the numbers slightly smaller. In which kind of markets are you currently selling at? Is it that the African markets, or is it that you're also selling in developed markets? Because the competition is one of the key aspects in both those areas. So how how are you trying to counter that, and what is currently on the ground that you're seeing in these export markets?
Major exports are happening to the European market and the developed market essentially, and we are selling there mostly through quota network. So if you look at our last quarter export, also almost 52% in exports were through the quota network, and that's where the quota is quite strong. Especially the compact tractor which are being exported from India, so there's a larger market in the developed countries for those compact markets, and most of the developed market are for high horsepower segment. So the lower horsepower is not really very their strength. So that really gets scattered from the Indian markets. But we are also exporting to neighboring countries like South nations or Sri Lanka. We are also exporting to Mexico, to South Africa. So those are also the countries which are, we catering to right now. We export to almost 80 countries from India. So I think the exports will continue to do well. So yes, the last market I mean will enter only with the North American, which is essentially the US market. So that's why we want to have a portfolio ready for that market. And that's why we're banking on the greenfield project, where we can also start exporting to US market in the long run.
Mr. Madan, we wish you all the best for all of this and more. Thank you so much for taking the time out and speaking to us today.
Thank you very much.
That's Escorts Kubota with their view. Exports will grow well. Margin expansion has happened, but difficult to predict whether this will sustain. It could depend a lot, or it will depend a lot on commodity prices. They are hopeful that they might do about 13%, but remains to be seen. Okay, thank Puneet as well for joining in on this conversation. Really appreciate it. Well, that's with regards to Escorts. Now let's move on to other pieces. First, Global Spirits is in focus on the back of the Q1 earnings, which missed street estimates, and it has impacted the stock. Let's get in Mahima with more details on this one. Mahima.
Yes, so Global Spirits is in focus and this is on the back of its earnings, and the earnings did disappoint the street because it was lower than what the street was expecting, both in terms of the top line growth as well as volume growth. The bulk, that is ethanol and ENA volumes, declined contrary to what was expected, and regular and other segments faced headwinds in Delhi as well as Haryana due to policy changes. Now, policy shift in Delhi affected the final month of the quarter is something that has impacted the top line overall as well. The revenue was up 9 odd percent, net profit was up 13%, we saw growth for around 20 odd percent, and margins are at 9% versus that of 8%. In terms of other highlights, capacity utilization stood at around 81%, which is improved in fact this quarter. Bulk alcohol sales up 11%, and prestige and above categories saw growth around 56% quarter on quarter. In terms of state updates with regards to where Global Spirit stands, Delhi liquor policy extended till March 2026. Business will now be as usual there, and UP continues to progress well, and other states' performance is in line with what the expectations are. So this is everything with regards to where Global Spirit stands, and of course its Q1 earnings.
Okay, that's with regards to Global Spirits. The other thing, I mean, when we just think of what some of the consumer plays, and I don't know if I can call Godfrey Phillips a consumer, let's assume I can. In some sense, it's consumption. Godfrey Phillips has been a real big shining star today, up about 9.8%, and that's something that Mahima told us about earlier. I think the other pocket to keep in mind is what's happening with the fertilizer stocks. Chambal fertilizer is up 6%. There is fact which is up about 3.5%. Off the highs of the day, I believe fertilizers and chemicals travel cost. Yes, marginally off the highs of the day, but still doing okay. And Coromandel too had a fairly decent outing. So mind you, the cash out here is the kind of volumes that some of these stocks are trading with. Okay.